You want to sell on your own website, but you don't want to have to deal with sales tax in every state in the US. So that's what's holding you back from actually getting started selling on your own website, right? Well, turns out you're probably wrong. Hey, my name is Janet LeBlanc. I run a business called Paper and Spark. I'm a CPA and a financial educator for e-commerce sellers like you, and I want to clear the air about the truth with what is going on with online sales tax so that you can make more money and not let confusion or misinformation on these sorts of topics hold you back from doing that. First, a little primer on what exactly are sales taxes. If you're not familiar, sales taxes are regulated by your state's Department of Revenue if your state has sales tax, and sometimes also a local government. There's not a federal sales tax here in the US. The IRS doesn't deal with sales tax, just income taxes. So sales tax are a state-based thing, and it is a tax that your end customer should be paying if your business has a nexus in that state. And it's a tax that is charged to the end user or the final consumer of a product when and if you're supposed to be charging it. So my point with that is sales tax is not something that should be coming out of your pocket like income tax, where you're budgeting and setting aside money to pay your income tax bill. Sales tax is something that if you're supposed to be doing it, your end customer should be paying sales tax to you. You hold on to it for a period of time and pay it over to the applicable state's government when it's due. So the key here with this question is, when are you actually supposed to be charging sales tax? I see so many online sellers get confused by this, and it's because rules have changed a whole lot in the past few years. In order to understand how it's working now, it helps to understand how it used to work. It still does work that way too. It's just more complicated than that. So back prior to about 5 years ago, we only had to deal with sales tax in states in which a business had a physical presence nexus. All right, so nexus is a fancy tax word for any sort of presence in a location. Back in the day, the only way that a business could have nexus was by having a physical presence. So the state in which you live and run your business, even if you are just selling online from home, you have a physical presence nexus in your own state. If you have inventory stored in another state, if you cross state lines to sell at like a craft show or an event, if you have employees in another state, sometimes these are other ways you can trigger another state's physical presence nexus test. It's going to depend on the state, but it's possible to have a physical presence in a state other than just your own. For many of us, though, who are running micro online businesses, we only have a physical presence in our own state, right? So if I lived in Texas, I had a nexus in Texas, I am required with my online shop to charge Texas sales tax to my other in-state Texas customers, and I don't have to deal with sales tax anywhere else in the US. Fast forward to about 2018, 2019, we started to see some changes happening with the definition of nexus to catch up to the economy of e-commerce and online sales, right? So different states started passing different new rules and regulations related to triggering nexus in other ways. One of those ways was for marketplace facilitators. Marketplace facilitators are like the big online sales engines like Etsy, eBay, and Amazon, right? So these marketplace facilitators are so big and sell such a high volume of stuff into all states in the US that they are now required to deal with sales tax on all of their individual sellers' behalves. So that's why if you sell on Etsy or Amazon or eBay, you're going to see that platform charge sales tax to your customers regardless of where they are located, assuming that your product is subject to sales tax. That's why Etsy sellers see all this sales tax happening. We don't actually get the sales tax collected by Etsy. They don't send it over to us as part of our sales. They may show it in their reporting, but we don't actually collect that money. Etsy or whatever the marketplace facilitator is collecting and remitting it, i.e. paying it over to those individual states on our behalf. They are doing that because they are a marketplace facilitator, and there are special rules for marketplace facilitators. Now, unrelated kind of to that is the new nexus idea of economic nexus. This is one that could apply to us as individual sellers. Economic nexus is the concept or the idea that if you are selling a high dollar volume or order amount volume of sales into another state, a state you don't already have a physical presence nexus in, you may trigger that state's economic nexus threshold. Now, very helpfully, every state has a different economic nexus threshold. It ranges to like $100,000 to $500,000 of sales just to customers in that state. And some states have, instead of just a dollar amount, they also may have a number of orders amount. So like 200 orders into the state could trigger that state's economic nexus threshold. If you are a higher volume seller, it's definitely something that you may need to be aware of and keep your eye on. Again, it doesn't matter what your own state where you already have a physical presence, it doesn't matter what their economic nexus threshold is. The fact that you have a physical presence there is already enough, regardless of how much or how little you're selling. The point that I want to get across to you today in this video is that if you are setting up shop on your own website, like you want to get started on Shopify or WooCommerce or Wix or something like that, those are not marketplace facilitators. That's your own shop site. You only need to worry about where your own individual business has a nexus when it comes to dealing with sales tax on that website. So if you haven't surpassed any other state's economic nexus threshold and you only have a physical presence in your own state, you only need to set up your Shopify site, your WooCommerce site, whatever, to charge sales tax in your own state. In any states in which your business has a physical presence, which is usually just your own, and in any state in which your business has passed their economic nexus threshold, which for most micro sellers is not anywhere else. We're not selling a high enough volume into those states. You're not a marketplace facilitator. You don't have to be like Etsy or Amazon and set up sales tax for all your customers everywhere in the US. You only have to think about where your business has a nexus, all right? This is something that I see really trips up sellers, keeping them from graduating off of marketplaces like Etsy onto their own websites and growing confidently there because they don't want to have to deal with those tax requirements, but you probably don't actually have to. So I hope that that makes you feel better. I hope it clears things up for you. If you are looking for more in plain English explanations of tax topics like this, make sure you sign up for the free training that I have linked in this video description. Thanks.